Hi everyone, and thank you so much for watching my channel, The Witty Turtle. In the last class, we have already started section 37, which speaks about general reduction, right? So, in the last class, we studied what are the three conditions which need to be satisfied for claiming deduction under this particular section. Then we studied about CSR expenditure. Then we studied about penalty and interest. Then after that, we studied about freebies provided to the medical practitioners is not allowed, and then we studied key man insurance policy ka premium is allowed, and then lastly we studied about yes, any kind of payments made to the political parties is not allowed. Understood? Now in today's class we will revise about some other expenditures and their allowability. Okay, so the first point says that dividend is not allowed as deduction. If you have a company, if the SEC has a company and the company is distributing dividends, so the dividend amount cannot be claimed as a deduction. Obviously, we know that. The next point says that income tax, wealth tax, surcharge, and education cess is not allowed as deduction. Why? Because we know that income tax is a personal liability, and all these three things, such as education cess, wealth tax, income tax, all these things, they are a part of your income tax only, right? So all these taxes are again not allowable as deduction. The next point says that if the SSC has a is a holding company and it has a subsidiary company, so the provision made for the loss of subsidiary company is not allowable as deduction. I'm not talking about loss, I'm talking about the provision made for loss of subsidiary company is not allowed. Now the next point says that according to according to accounting standard 22, the provision for deferred tax is again not allowable as deduction, right? Provision for deferred tax as per accounting standard 22 is again not allowable as deduction. Next point says that provision for diminution in the value of investment or asset as per accounting standard 13 or 28 is again not allowed as deduction. What do you mean by diminution in the value of investment or asset? For example, I have made an investment whose value was 1 lakh rupees yesterday, right? Yesterday, the value of the investment was 1 lakh, but today the value of the investment has become 98,000, right? So the difference of 2,000 is known as your diminution in the value of the investment or asset, according to your accounting standard 13 or 28. So whatever provision you know, right? जैसे हम लोग provision for bad debts करते हैं, similarly the provision made for diminution in the value of asset or investment is not allowed as a deduction, right? The next point says that provision for unascertained liability is not allowable as deduction. Now let's understand what you mean by unascertained liability. So the liability which is not fixed, which is not predetermined, or we can say that any anticipated liability, any liability which is not there but you are anticipating that it might come as a liability in front of us. So for all those anticipated liabilities, if you are making any provision, if you're making any provision in your books of accounts, then that is not allowable as deduction, right? So after this, one very important point comes that says that salary or perquisites paid to directors are fully allowed as deduction. They are fully allowed as deduction, but up to the limit prescribed under the Companies Act. Up to the limit prescribed under the Companies Act under Section 40, right? For example, let's take an example. Limit prescribed under Companies Act is 1 lakh rupees, okay? But you paid salary and perquisites to your directors, which amounts to 1,20,000. Then the exceeding amount, the amount which exceeds the limit, that is 20,000 in this case. So that particular amount will be disallowed. But 1 lakh rupees, which is within the limit prescribed in Companies Act, that will be allowed as a deduction, right? The next point that we are going to study now is related to expenditure on issue of share, when the expenditure incurred in case where you are issuing shares, right? In relation to IPO, that is your initial public offering, or FPO, further public offering, or right issue, the cases where you are making any right issue. So in that case, they are considered to be a capital expenditure. They are considered to be a capital expenditure, so they are not allowed. So the expenditure uh, related to issue of shares in case of IPO, FPO, or right issue are not allowed, right? They are not allowed. So the judgment was given in Brookbond India Limited case, where the Supreme Court gave a verdict that as in these cases the share capital is changing, there is a change in the share capital is happening, so it will be treated as a capital expenditure, or because ये capital expenditure है, so the amount will not be allowed, right? uh, Now you might think that, for example, there is a company who applied for IPO, and the company spent rupees 20 lakhs for IPO, right? But the IPO did not get approved. The IPO did not get approved. So in that case, what happens? In that case, the intention of the expenditure will be considered. If the intention of the expenditure was for IPO or FPO or right issue, so obviously the intention was capital expenditure, right? The intention was to make a capital expenditure. So in that case, the amount of rupees 20 lakhs will not be allowed. Even if the IPO did not get approved, still the amount will not be allowed. Now coming to the second part of this. The second part deals with buyback, issuing of bonus shares, or any issuing of debentures, or lastly getting any kind of loan, raising any kind of loan. Any kind of expenditure made in case of buyback, or in case of bonus shares, or in case of issuing your debentures, or in case of raising any kind of loans, so in that case they are all treated as a revenue expenditure. And if they are treated as a revenue expenditure, so again they are allowed as a general deduction under section 37. What are allowed? Any kind of expenditure made in connection to buyback, bonus share, then your issuing of debenture, or raising any loans. Understood? I hope this is clear. In this point also there is another catch, which says that if the company has to increase the authorized share capital limit, the company has to increase the authorized share capital limit in order to issue bonus share, right? In order to issue bonus share, then in this case what is happening? There is a change in the share capital, right? So there is, so this will be again treated as a capital expenditure, and hence it will not be allowed, right? Hence it will not be allowed. Yes. Now coming to the next point, which says that loss from illegal business is allowed, but illegal expenditure is not allowed. Right? Illegal business. Okay. For example, the SSC is a narcotic drug seller. Okay, which is a illegal business. This business is not legal, and you got around 1,000 kg of heroin from his stock in trade, right? From his closing stock. So in that case, what happens? The heroin amount was seized. So in this case, the loss from illegal business will be allowed. For example, the SSC was having loss in the narcotic drug business. So what happens? The Supreme Court, in one of the leading case laws, I don't remember the name of the case law. It was, I think, some Qureshi or something. So in that particular case law, what happened? The Supreme Court held that the SSC can claim deduction. The SSC can claim deduction against the loss which he is getting from the illegal business, right? Why? Because in this case, the Supreme Court told the SSC that yes, you can whatever profit you have earned from the illegal business, from that you reduce the amount of loss, and whatever is remaining, on that you pay tax, right? On that you pay tax, and your entire business, and there won't be any further proceeding on you. Okay. So in this, what happened? The illegal expenditure is not allowed. Any expenditure made in connection to any illegal business is not allowed. But if you are having any loss from your illegal business, then that can be made allowed under this section, right? This is clear. Illegal expenditure is not allowed to be deducted, but a loss from illegal business, as it is not hit by any provision of section 37(1), so it is allowed to be deducted, right? Now the next point says that if the company, if the business is providing any kind of gifts to the employee on the occasion of their marriage, then that is known, that is your allowed under section 37, allowed as a deduction. But point to be noted that the gift paid to the employee only on the occasion of marriage is allowed. The next point says that interest on late payment of any indirect tax like sales tax, your GST, or any kind of service tax, etc., is allowed to be deducted. You can claim a deduction on interest on late payment of any indirect tax. But in case of direct tax or in case of income tax, no interest on late payment of income tax is allowed under this particular section, right? Now I'll show you a table after the after everything gets completed, and your difference between DT and IDT will be cleared out. The next point says that any kind of this is a very important point. Don't get confused between this point and the second point that we studied about income tax. This point says that expenditure incurred for income tax or wealth tax proceedings is allowed to be deducted. Now tell me, what do you mean by proceedings? Proceedings means if any kind of litigation is going on in the court, then whatever amount of expenditure you are making in connection with the proceeding of income tax or wealth tax, then that will be allowed. But the amount of income tax or wealth tax that you are paying, that will not be allowed, right? Interest on direct taxation is not allowed. In any kind of penalty on direct taxation is not allowed. Any or the tax amount is not allowed as a deduction. But if you are making any expenditure in connection to the litigation or in connection to the proceedings of income tax or wealth tax, then that is allowed as a deduction, right? Expenditure incurred for filing income tax or wealth tax return is not allowed as a deduction, right? If you are making any return of income in case of income tax or wealth tax, then that is again, then the expenditure incurred on your ROI filed, that is not allowed. Now, again, the next point says about indirect taxes are allowed to be deducted whether paid in India or outside India. Indirect taxes are whatever amount of taxes, whatever amount of indirect taxes you are paying, that will be allowed as a deduction under section 37. Right? Now, the next point says that traveling expense of spouse of an employee or director outside India will be allowed if you prove that the it was necessary for the spouse to accompany the director or the employee in connection to the business, in connection to the business, then that is allowed. So let me read the same for you. Traveling expense of spouse of an employee or director outside India, if found necessary in connection with business or profession of the SSE, then it is allowed on the grounds of commercial expediency. Commercial expediency. For example, if you prove that the director or employee went to such a place where which was necessary for the business to to grow, for the development of the business, and in that place it was necessary for the director to take his spouse with him, then in that case whatever traveling expense was there in of the spouse of the director, that will be allowed. Okay. Now the next point says that distribution of free tea bags or tea packets by a tea manufacturing company. For example, Tetley is a tea manufacturing company, right? And if on the AGM, on the annual general meeting, on the day of annual general meeting, the company is providing free tea bags or free tea packets to the shareholders of the company, so in that case, that expenditure will be allowed under section 37. That will be allowed under section 37. The next point is very interesting one. It says that any kind of customary expenses, for example, Diwali puja or your office inauguration puja, on the occasion of New Year or Diwali or office or branch opening, uh, so in that case, any kind of expenditure incurred on temple in factory will be allowed as deduction, right? or any kind of puja, if you are if there is any kind of puja on the occasion of New Year or Diwali or opening of a new branch or new office, then again that amount of customary expenses will also be allowed as a deduction. Now, another point says that expenditure on replacement of machinery part is considered to be a revenue expenditure if it does not result into increase in the working capacity of the machinery, right? So in class 6 or 7 we revised this particular thing, that what is the meaning of revenue expenditure and capital expenditure in case of repairing of the machineries, right? So what is revenue expenditure? For example, I changed one small part of this particular phone. I changed the what do you call this, gorilla glass of the phone. So it is not increasing the working capacity of the phone, right? So that will be considered as a revenue expenditure. But if I increase the memory of the phone, I insert one another SD card into the phone, so the memory of the phone increases, or the storage capacity of the phone increases, which results in increasing the working capacity of the machinery. So that will be known as a capital expenditure and that will not be allowed. But any kind of revenue expenditure made in connection to replacement of a machinery part, then that will be allowed, right? I hope this is clear. Now, the next point is a very interesting one. It says that if, for example, ICAI is organizing any kind of seminar, right? And for example, you are a chartered accountant, or you're a cost accountant, or you're a company secretary, and you are attending that seminar. So, any kind of expenditure incurred for you to attend that seminar, where you're supposed to increase your knowledge or generate more knowledge, so in that case it will be allowed as a deduction under section 37. It says that expenditure incurred by a chartered accountant or an author of a book for standing seminars organized by various trade bodies. Okay, for example, you are an author of a book and you're going to any seminar which is organized by any trade bodies, or even ICAI or ICMAI. So in that case, it is considered that you're attending that seminar for generating knowledge in relation to your business or profession. So in that case, whatever expenditure the SSA is incurring to attend that seminar, that will be allowed as a deduction, right? So by this time we understood all the points relevant for your for claiming general deduction under section 37. I hope this is clear to you. And yes, before ending the video, let's do another thing. Now you can see this particular box where I have made a small chart, where it says that any kind of tax amount paid in case of direct taxation, if you're paying any kind of direct taxation, income tax, then that will not be allowed under section 37. Any kind of interest paid in relation to direct tax is again not allowed. Any kind of penalty paid in relation to direct tax is again not allowed. But in case of indirect tax, whatever tax amount you're paying on indirect tax, that will be allowed. Any kind of interest amount paid on your interest on late payment of any indirect tax is allowed, but any kind of penalty amount paid on your indirect tax will not be allowed, right? I hope this is clear. So with this, section 37 comes to an end, and from next class onwards we will start with section 40, right? If you find this video helpful, then please hit the like button, subscribe to my channel, The Witty Turtle, and share this particular series or this playlist with your CA and CMA final and inter friends, so that everybody will be benefited by this.